Hello, my name is Ngozi Benedita John, and in my last video I explained how we can both leverage on some of the strategies that the corporate organizations have used over the years in order to triple or double their revenue. And one of the points I made mention of was the fact that before we can start investing in this capital market, right, we definitely need to start with a substantial amount of money. Why is this? Why? Because if you're going to go venture into the capital market or in the world of investing, right, you need to start with a very good amount of money so that the return on your investment can be high, and as well you'll be motivated as well when you're diving into this so I'm going to explain in details some amounts of money that one can definitely leverage or start, and then the potential return you stand to get. So follow me and let's walk right into it. All right, let's take a simple calculation of return on investment based on invested capital of each individual or business. As you can see here, these are examples of the diverse individuals, and these are the invested capital, the interest per year, and then the return on investment. When you look at the first person here, this person accumulated 120,000 and he invested it in a capital instrument, right? Capital market instrument, and here 18%. When you look at here, you can notice that the individual is having return on his investment in the terms of 21,600. Now moving to the second person, this person invested 240,000, still the same percentage, right? The person is getting 43,200 that same year. And then the third person invested 600,000, still maintaining the 18%, and then the return on this person investment is 108,000 naira. And now moving to the fourth person, invested 1 million naira with the same percentage being maintained. We have 18% here, and you can see his return on investment is 180,000 naira. Now moving to the last person, this person invested 2 million naira and still maintaining the same percentage that same year. This person is having 360,000 naira on his invested capital. Now can you see how people double this money? Now the good thing about this whole thing is that these 5 people, they invested diverse amount in the same year, but then their invested capital varies, and you can notice the progression of the return on investment. So imagine you just have a 2 million naira lying down somewhere, and you're investing it in a capital market instrument, and you're having 360,000 every year. And the good thing about this whole thing is that when you now start compounding all this thing, that is whatever you invested in a particular year plus the return on investment, you roll it over into the next year, you will definitely notice that the return on investment for that second year would definitely be higher. So this is why I say save up a substantial amount of money before you start investing. 120,000, you can imagine 21,000, which is a bit fair, but you can also see the progression. All right, that is it about the simple calculation and all of that. So ensure you start saving up little by little if you've not started, because in 2025 we're definitely going to double or even triple our income with this special strategy. We'll definitely be looking more in this as we progress. All right there, so as you can see in the example shown on the slide, you notice that when an individual invested 120,000, for instance, the return on investment is quite a bit low to compare to someone who invested 240,000. Now, when we skyrocketed it into a million naira invested capital, you also notice the huge return that comes to you as a result of you inflating or increasing your invested capital. So that is the whole essence why I made mention that you need a substantial amount of money before you can go into. When you start with let's say 50,000, 80,000, trust me, you can definitely start, but then with those amounts, but then the return on investment is not quite encouraging. You won't be encouraged to want to continue. You tend to be, how will I call it? You tend to lose your interest in investing, and that's why you notice that a lot of us really don't we are not really consistent on investing, and I really want us to break that I want us to break that cycle, if you understand what I mean. So that is why I encourage you starting with a very substantial amount of money, and you will be very happy. Anything from 120,000, 240,000, 500,000, a million naira and above is recommended. And please, this is not to say that, oh, for those who already have this invested capital in the range of, let me say, the amounts mentioned from 500,000, 200,000, a million, that you need to wait, right? If you already have a very substantial amount of money, there is no need for you trying to like gather anything again. You should just dive in right into the capital market and start your investment. You will be so happy you did. Well, I started that recently, and when I noticed the difference in the return, I was glad, because at some point in my life I started with 5,000, 10,000, 20,000, and then in fact was it not a MTN shares I bought then? I bought MTN shares in the year 2021, and I could remember, I think I got in dividend payment or something, 700 naira, 2,000 naira. Guess what I did with the money? I used it to buy a recharge card. But so good. But trust me, if you're going to definitely have like let me say return on your investments in the amount of, let me say, 50,000, oh girl, oh boy, you'll be so happy to invest more. And that is why I recommend you doing that. Okay, what are some of the instruments we can invest in the capital markets? Of the example to look out for. Now, speaking about some of the instruments we can invest in the capital market, right? There are so many instruments in the capital market, but as a beginner, yes, we are all, I'm also still a beginner, so I'm still regarded as a beginner. So as a beginner, for a beginner, right, you can look into shares, you can look into bonds, you can look into mutual funds, and you can look into common. Okay, let me briefly explain each of those, right? So for shares, right, shares are more like you becoming like a co-owner of a company. And how do you get shares? You can get a share when you see that some company, when they need some amount of money in order to maybe expand their projects or to do something in general. They try as much as possible to release shares to the public. It's called initial public offering, IPO. So when they release these shares to the public, they are more like inviting people, inviting you and I to come and own a fraction of their company, or to come and own, to come and become a co-owner. Remember when I talked about, remember when I spoke about my MTN share? So as I did like this, I'll be board of, no, I'm not board of director, I'll be co-owner of MTN. Even though the money I'm getting as dividend is actually low, but the good thing about the whole thing is that in as much as the share price keep increasing, the money will also increase as well. So it's not just about the dividend payment alone, right? It's not just about the dividend payment. So you can get into shares, you can look out for some companies who are reliable, trustworthy, and try as much as possible to subscribe to their shares, and then you can become a co-owner. That is number one. Number two thing you can do is to invest in bonds. And now for bonds are of two categories. We have government bonds and we have corporate bonds. So for government bonds, now government bonds is more like when governments are trying as much as possible to encourage individual to lend them money, or to encourage individuals to save. So most time they pull funds from the masses in order to use it to carry out a government project. And when you lend government money in order to do one project or the other, they definitely appreciate it substantially by even paying you high interest. I think the last federal government savings bonds I invested in is paying to the tunes of 80.44%, which is quite high for me annually. And the good thing is that for government bonds, you stand to, especially government savings bonds, right? You stand to get paid your ROI, your return on investment, on a quarterly basis. And then we still have just government bond, and that one is quite high as well. I will definitely try as much as possible to go in much better detail differences between these two bonds, so that you can know their unique difference and how you can leverage. But then for the government savings bond, you can definitely start with that 120,000, 1,500,000, and then you can be rest assured that you're having up to 18% or 17%, as the case might be. Trust me, however, it varies each year, but you can get a substantial amount of money as return on investment when you invest into the government bond. Therefore, corporate bonds as well. Corporate bonds, I think I've also come across corporate bonds that the return on investment was up to like 16% and thereabouts. So I leverage on that as well. And this corporate bond I invested is actually for like 9 months. For corporate bonds, is as the name implies, right? You're lending money to, maybe they need to carry out one project or the other, and they need some amounts of money that they can't afford, or that their operation capital won't really be substantial enough to carry out. They try as much as possible to dish out what we call the corporate encouraging individuals to subscribe or to loan them money. Right. And when you buy these bonds, or when you invest into these bonds, you also get a very substantial amount. That is it about the bond. Another one is commodities. I, for once, I've not really invested in the commodity markets. I don't know. I've not. So commodities are basically like raw material, gold, lead, copper, you can name them. So they are basically they are referred to as commodities. Definitely you can still invest in this as well, and you also get a very substantial amount of return on investment. And then the last one I'll be talking about is the mutual funds. Mutual fund, I've I've tested that one as well. Mutual fund is more like you're trying you and some other colleagues, you are some they are basically not colleagues per se, you are some other individuals, let me say me, you, and the masses. We cannot afford the amount a particular instrument in the market is going for, and then this company come in and say, okay, Ngozi, drop in any amount you can afford. Osita, drop in any amount you can afford. Simbi, drop in any. Drop in any. Do you still have Simbi? Simbi goes to school. Sorry. Simbi, but I'm still going to use that as an example. I don't know, we might have Simbi out there. Simbi, drop in any amount you can afford, and then they collect all these amounts together and they now invest it in a particular instrument that singularly, like each of us could not or would not would have afford instruments based on our financial capacity. And then they also try as much as possible, when these instruments do very well, they try as much as possible to settle each and every one of us based on our invested. That is some of the instruments you can leverage on in the capital markets. Trust me, big corporations are doing this. Manufacturing even church they invest too. So by the time you see this pastor is flying private jet, or this church is doing one outreach and all of that, trust me, now return on investment, they add up to that money. So that is it about some of the instruments you can definitely leverage on in the capital market. I encourage you to do your findings, do your research, and know the one that suits you, or the one that speaks to you, right? The one that you blend with, you vibe with, and try as much as possible to look into it. And then you so much for listening to this time, and please, me, I'm new here. If you want to keep seeing this my beautiful face, if you want to keep seeing this beautiful face, please subscribe to my YouTube channel, like, comment, encourage me. Oh, if you want to keep hearing this my fine voice, voice how they use collect money. By the way, try as much as possible to like, comment, and then subscribe to my YouTube channel. I will really appreciate it. God bless you. Until I come your way next time, keep enjoying and having a great day.